All right, hi there, guys. Welcome. I'm sorry I'm a little late today, but welcome to today's Bretton's midweek webinar. And today is already the 12th of May, 2021. So we've got quite a number of things to discuss, mainly to look through what has actually happened since Monday right up to today. So it's a midweek look at the whole market, and we just want to scout on what the opportunities are as of today, especially, and then look at how today's trade would actually pan out throughout the week up to Friday. So let's get going on that. Before that, just to give you guys a little bit of an insight, what has actually happened as of Asian Open is that we've seen a lot of Asian currencies, Singapore dollar, Malaysian ringgit, Indonesian ringgit, they're all been having an appreciated value. That means they all have been actually going up against the dollar. So dollar has been very weak. So we want to look at what's going on, what are the interests by the investors and the traders through the heat maps as well, and then look at some news that might actually give us a little bit of a hint of what's going on at the moment, because they are talking about tapering, no tapering, whether there's a pump in of money by the Fed or no pumping of money. Looks like no pumping of money at this stage. So that's probably the reason why the US dollar is actually falling. So we want to time it properly, whether or not it is time to actually buy gold as well. So we want to look at the technical side of it as well of what's going on. So there we go. Now we want to look at just a little bit on the currency heat map first, just to give you guys a little bit of an idea overall. You can see that every other currencies here, it looks like on the daily chart, it's slightly on the weaker side than the dollar. So dollar on the heat map is looking like there is some bullishness, not bearishness. So we want to have a clarity at this moment of time of what is exactly the trend for the dollar, so that we know a little bit more about gold and also the other currencies. But what we can also see is that we've got most of the other currencies are said to be more bullish than AUD and NZD, meaning AUD and NZD both are appearing to be bearish. Now, this is just the heat map side of it. If we go on to specific currency pairs, it is still not yet marinated properly in terms of the trend. You can see all mixed colors and all that amongst most of the currency pairs. But we've also got CAD, for example, is said to be more bullish in a way. Only on the 4-hour chart, it's a little bit bearish. Mainly could actually be a bit of correction going on, but then overall on higher time frames, CAD is said to be quite strong against both AUD and NZD, quite bullish or strongly bullish, I must say. And NZD, as you can see, quite weak there, especially against GBP and CAD. But this is just an overall generic picture, but we want to go on to the heat map, onto the top movers as well, and then get onto the heat map that I like better, which is the Forex early warning, because the heat map there is more concentrated on volatility and liquidity first, not trend first. Liquidity and because liquidity and volatility, if it's high, then it will solidify the trend. Okay, so here, let me just go on to here. Now, as we can see, we have got NZD being the number one. We've got NZD, NZD USD, AUD USD, and GBP NZD again, concentrating on NZD currency in the top 10 today. So we can see these are the top three right there, and we've got NZD being concentrated or focused a lot. The top two has also quite a solid trend in a way, because you have got all 4 dots on all 4 time frames, and that actually is giving me an idea that the NZD and the AUD is trending on the downside quite a lot. So this might then match it up with what we have seen on the heat map on Action Forex. So now we want to confirm that a little bit from the Forex early warning and see what exactly is going on. Okay, so on the Forex early warning right here, before we go to this side of the Forex early warning, let me just move that. we can go on to this market scanner section as well, just to give you a little bit of an idea, to confirm the trend side of it as well, that the Asian session, basically we have seen USD strength in the Asian session and then AUD weakness. So that does actually confirm that AUD, we're probably looking into selling more AUD. And then in the Asian session as well, we've got the NZD weakness as well here. Then we've got yen being strong on the main session, which is the UK, US, European session, this one here. Let's marry that up and look at what we can see on this section. Now, here we can see that on USD pairs, it's not too bad. We've got the bars participation wise in terms of European session, American session, seems to be quite good participation on the upside for the other pairs, but not for the dollar. As you can see, the dollar in this session seems to be on the weak side. So this is going to be not really matching what we have seen on Action Forex. Action Forex is more an overall, and it's also concentrated on bullish and bearish, and a lot of traders are using it mainly just to buy and sell and look at what's bearish and what's bullish. So that's why it's a free website as well. So but now here on Forex Early Warning, it's more on the volume and the liquidity participation, and that makes a more solid trend. So now, as far as I can see, the trend for USD would most probably be on the downside, because we have got the other currencies are on the buy side. As you can see, Euro on the buy, it's quite high. On AUD versus the USD, it's on the buy. So now we get a better picture on the participation, the liquidity, and the volatility. Then we make our own analysis on the trend on the chart. So then we would be on a better position in terms of the right side of the trend. Okay, so we know that USD is picking up. So in my guess, USD is on the downside. In my guess, gold would have been picking up by now, but we will go and check on that on the chart itself. So here with CHF pairs, I wouldn't actually go into CHF pairs as of today, as of now, especially because you see that the participation in the European session and all that is just really very low. We don't have high bars. It's just going to be risky. For example, if we go into a market that is not participated by the big boys. So I will ignore CHF pairs for now. I'll ignore the Euro pairs for now as well. And we've got Euro versus AUD though being quite bearish right there. It's got the only long bar right there. But I just want to ignore all these ones here. I want to pay attention to the high volume ones. USD, not too bad. I will look into the majors as well, but not on CHF crosses, not on Euro crosses as of now, especially the miners. And the one here maybe not for now as well on the JPY. As you can see, it's picking up quite well, but maybe it takes more time to pick up, and it is picking up quite well and steady. You can see that the bar is getting longer. So throughout the session, maybe after London Open or maybe after the US Open, then we can actually look at JPY pairs, giving us a little bit more opportunity to trade, but not just for now. Now maybe we rest a little bit for the JPY pairs. But we can take a look definitely on AUD pairs. AUD pairs, especially AUD USD, is giving us quite nicely the hint that it is actually having a lot of participation in the market for AUD pairs. So give me a second. Let's separate the bars. The bars and the charts are two different things. So the Forex early warning bars right here. Are you talking about the bars here? The charts, where are the charts? The charts meaning on the candlestick chart, you mean, Alfred? All right, so let's separate the two. It's got no really connection at the moment. So here, for example, is just telling you market participation. So Okay, not charts. You mean the bars here, yeah? So the bars are just telling you market participation, how much liquidity people are actually trading. Yeah, so all these bars, the longer the bars are better. So for example, AUD pairs right here, you can see there are lots of a lot of long bars. Okay, so the longer the bars and the more thicker the bars are better. You don't want to go into a pair like this one here, for example. Okay, here it's very weak because you see a majority of the pairs has got no long bars. The longer the bars, the better. And the more steady it is in one color for one currency is better. Like for example, if it is for AUD, you can see that AUD, all green bars here, and they're quite long, right? So then AUD is on the buy side. Here, Euro AUD is also on the buy side because it's a rate for Euro and it's green for AUD. So all the AUDs are having quite reasonable long bars, and that means AUDs on the positive or bullish. That's it. It's not about the longer the bar means the more participation, more people are trading, more bigger boys are trading, the longer the bar. If the bar is really short, nobody is trading that pair. That means it's no trend as well. So that means the liquidity is low, the cash is low. People are not paying any interest in trading that pair. But the longer the bar is market participation. So if the bar is green, that means the market participation is on the buy side. If the bar is red, then the market participation is on the sell side. That's it. But you want to concentrate on market participation, liquidity. It has to have liquidity and volatility. Then the trend will actually remain stronger. If not, the trend will change and you will suffer from the market going sideways or from the market going up and then coming down and going up and coming down, and you've got a lot of reversals and a lot of frustration as well. So that's why you want long bars. Long bars will help you understand that you can focus on these pairs, but you need to do your analysis on the pair, on the charts, on the candlestick. Yeah. So like right now, I won't pay any attention to not JPY. I won't pay attention to the CHF pairs because they are very low in terms of participation. Okay, very low on Euro pairs as well at this moment of time, maybe except for Euro AUD, right? But then I like to look at pairs that has got all these big bars at the moment. So here, for example, maybe my focus as of now today, I want to look at AUD pairs. All these AUD pairs, I want to look at it because it is said that it's got loads of buying interest on AUD pairs. Okay, so AUD pairs, it's been very steady on Asian session. Now it's going into the European session, very steady, very nice. So I want to look at all these column right here. I want to look at AUD pairs at this moment of time. I want to focus on AUD pairs first, and then we can look at the other ones. We can also focus on majors as well. USD ones are not too bad. So major pairs and AUD pairs. Okay, so this is the focus that we can actually look at. Let's look at a little bit on the news section. Okay, we can see that there are some headlines here. Crude oil, whole gains as stockpiles fall. Okay, OPEC lifts demand. So the higher demand, the price basically would actually fall. So here, if there are news about oil, then it would actually connect to the Canadian dollar. So if the crude oil is said to be the stockpile fall, if the stockpile actually fall, that actually means oil is actually going up, not down. So if oil is up, then Canadian dollar is also up. So if we go back onto here, we can see that the Canadian pairs looks like it is definitely going up here. So Canadian dollar looks like the participation for a buy is increasing here, but it's not increased enough. The bars are not long enough, but at least we get a little bit of a hint that Canadian dollar might be actually going up. So if Canadian dollar is going up, USD is actually really going lower, then USD CAD is a good pair to actually sell. So you sell your USD, you buy your Canadian dollar. So that may be a good pair as well. So we are attaching the headlines to what we may be able to trade as well. So oil, because of oil being the center of focus in terms of news as well, that basically means if oil is actually going up because of the stockpile falling, then Canadian dollar might be of interest today as well. But we want to also look at the economic calendar to see whether or not we have some economic data release that will support us on the Canadian side of it as well. So, but if not, we should actually be looking at Canadian dollar crosses as well, mainly on the buy side, but we need to decide on the buy side or not in terms of trend when we get onto the charts, okay, onto the charts. So here, we've got some euro focus here, but I'm not focusing on euro at this moment of time. I want to focus on AUD pairs because I want to follow the heat map as well. I want to look at participation. So AUD crosses and major crosses. So here it says Dow Jones retreats as inflation heats up. So as at least we know that the inflation is on the upside. So that might trigger, when we've got news about inflation, we know that the volatility will also go up. So that basically means it's good time to trade today as well. There are many things that might actually cook up the volatility and the liquidity of the market. So that's good sign for us to actually participate in the market, to trade more as well. So today is Wednesday. So Wednesday's economic calendar looks like this. There will be a lot of movement expected for the GBP crosses. So if we go back here and we look at GBP crosses on this section is the European and the UK section. So GBP, as you can see, it's more on the buy side. The participation is green bars, but the green bars are not long enough. So that means the timing is not just yet right to analyze GBP pairs yet. Maybe we want to wait until the bars gets a little bit longer, maybe after the London Open. Okay, maybe in about 1 hour to 2 hours time, then we can see the pickup. If it really picks up, then we can start analyzing and looking for patterns and all that on the GBP crosses as well. Okay, so for now, not just yet. We had very big moves, a very big participation of buyers in GBP NZD, but that was in the Asian session. In the European session now, in this session, it hasn't even started yet. So things are a little bit on the slow side. So not yet there on the GBP pairs. So let's, okay, we need to go back to the economic calendar. All right, so that is because we are expecting the gross domestic product, which is a very big report that will tell us a little bit about UK's economy. So gross domestic product, or GDP, will come out, and that basically has already came out, and that was positive. So this is quite good. This is going to increase our confidence in the buy side or bullish trend for pound, most probably. We've also got positive number on the manufacturing side of it. Euro, we've got the German harmonized index that will rattle the euro a little bit more. We also have, again, we are awaiting the speech right there, governor's speech at lunchtime UK time, if I'm not mistaken, or my time. So that will come in another couple of hours. So that will still stir the pot for liquidity of the British pound. Then we are looking at more stir up of major pairs, especially when it concerns the US dollar, because of the CPI, and also both are CPIs on different terms. So yeah, that is where we expect movement. So yes, we've got quite a number of pairs to actually consider, but right now I want to maintain my focus on to crosses and AUD crosses as well. But then when London opens and later on in another couple of hours, then I will look into Euro crosses as well as GBP crosses, because of all these things that are going on in the economic calendar. Okay, so yeah, that's basically it. So now let's get to the charts, and I just want to go through a couple of other things. We'll get to gold specifically in a while, but I just want to go through very quickly with what I still have on screen in terms of the analysis that we have actually done for several pairs for traders out there. So USD CHF, as we can see, it has exactly reversed in that blue zone and it's on the way up. I'm expecting more fall. If the fall comes down, it should actually come to this level right here for USD CHF. But I'm not looking into the USD into CHF pairs so much because there's just no participation too much on the CHF pairs at this moment of time, according to the Forex early warning heat map. So I don't want to pay attention to that. And at this moment of time, it's not my focus to look at that yet, but just to give traders a little bit of an idea because of the Z pattern that was drawn. I still expect a little bit of movement to the downside until it hits this level at 89.50 area. So once it comes down to that area, perhaps then we want to look at whether or not we want to trade the USD CHF. But to trade the USD CHF is probably better after it makes the retracement to come down. Then it will tell us what to do. So once it comes down here and it wants to go down much more, then we take the sell trade. But if it starts to bounce upwards, then we can take the buy trade. But we need to wait for USD CHF. It's better not to participate in it yet because the timing is not right. So for CHF, JPY, it's been a very beautiful trade because of all the TPs has actually been hit and right up there as well at 120.90. It was expected by myself a couple of weeks ago for it to actually go right up to the 121.00 area. So 120.90 would actually be an exit price to the max, but I never taken that trade. I've taken that trade only until here. So we have made on average 120 pips because it's 30 pips times four times four layers that you could have taken that. So that was a very nice, beautiful trade on a geometric bullish pattern as well for CHF JPY. NZD USD, I think the trend is coming to what is expected now for NZD USD. So once it does actually come downwards, for traders who wants to actually do a bit of a sell, for example, it is possible, but maybe the sell should actually be a little bit on a smaller level, not to actually leave your sell to go while on its own, because here, for example, we want to limit our sell maybe up to 71.90 would be your take profit if you are selling or want to sell the NZD USD, mainly because I'm only thinking of trading the NZD USD for a sell only later on once it triggers the centroid area. But in my guess, because USD is looking like it may be what do you call that, stronger, I can see that can actually be triggered as well. But right now it's quite good that it has reversed exactly as expected in this rate zone area. So it is already on the way down. But for me, I'm a very conservative trader, so I don't actually trade before it hits or trigger the centroid. So for those of you who are interested in selling, you can actually start selling. Perhaps now the price is at 72.32. So either you want to sell right now or sell a little bit lower just to participate in other candles. 72, perhaps at 72.10. So 72.10 can be your selling price. You can put it as pending order, and then 72.10, then you can actually come down lower, for example, and take your profit at 71.90 or 71.90 area. You could probably make a couple of pips, maybe about 30 plus pips or so on that one there. But we want to be careful just in case, because we don't know whether it wants to go back up and down and create a sideways movement. We don't know that yet. So for me specifically, I like to write the sell side of it for NZD USD, but after it has triggered the centroid. So my preferred selling price will be under the 71.00. So 70.90 would actually be my my sell price personally, and then I would probably take profit 7090 and then 7010. So I'm looking at about 80 pips to actually take on the sell of NZD-USD, but that 80 pips is after it has triggered the centroid area. Okay, so that is for NZD-USD. So for those, you've got two choices. You've actually could make two options, two pending orders. One is the one for right now before it hits the centroid, and then one is for later on to hit after it has triggered the centroid. Okay, so that's basically it. Okay, so that's for NZD USD. For USD JPY, it's looking not too bad, but because of the strength of the USD, it's most probably going to be going up and down on this one here. It has triggered the sell, if I'm not mistaken, already quite early on, but then it hasn't progressed downwards a lot. So I see that perhaps for USD JPY, for those who have already sold, let's say, following my signal sell at 108.40. Let's see whether, yeah, it has been triggered, and I think perhaps it's giving you guys a bit of a loss, and I think it's a small, considered small loss at 48 pips or so, or almost 50 pips. So what I would do is to actually close that order. If you are on a sell on USD JPY and your loss, let's say in dollars, is about $50 or so, 40 plus dollars, $50, then you can actually close that, so we can cut the loss early on the USD JPY, only because we expect the USD to strengthen a lot more. So we want to be careful with that, so we don't get caught up in this trade and causing us a big loss, or to hit our SL. Before it hits our SL, we cut the loss earlier. So that's for USD JPY. For gold, it has been really, not gold, for oil, it has been really good for the oil buyers. And right now, it's probably going to gain a lot more, and perhaps a possibility to go up more on this side. So I will be looking at ABCD on the upside again, but I'll release that signal soon for oil traders. We've got an A here, we've got a B here, we've got a C here, and we're expecting it to go beyond 6600 area and above, maybe above this area as well. So this area here is 6641. So I'm looking at 6650. I've just realized that for oil as well, we can actually use the psychological level. It has been experimented. I experimented only with about 800 to 900 charts, I think. So it has been quite good. It was about 80+%. It was reacting to psychological numbers. So it's quite good. So then I realized that like, for example, now it's trading at 65.49. So the 49 is very close to the 50 psychological level, and that is an area that it has also loads of resistance as well. And I have looked it back for oil, so it was quite good. It's been quite good. So we can add oil as well. Gold, I'm just haven't experimented properly using psychological numbers, but hopefully I can come up with something that we can use psychological numbers for on trading gold. But oil, I think it will work quite well. So oil seems to be respecting the 50 and 80 psychological number more than the rest, if I'm not mistaken. Let me just check again. Yeah, it is the 50 psychological level, especially where there's a lot of reversal has happened in both 50 and 80. So 80 and 50 seems to be the favorite psychological numbers for retracements or reversals for oil. Okay, so that is for oil. Okay, now GBP USD was a very beautiful trade as well on the bullish ABCD pattern. And it has actually reversed exactly there. It has actually gone up in a very beautiful, nice angle as well to actually hit the D point on GBP USD. So congratulations to those who have ridden that from the centroid area. If you have ridden it from the centroid area and up, then you probably have actually made about 200 plus pips. but I didn't make that much because I was trading the C to D on the upside, but I was trading in layers. So there are traders out there that are confident enough and they want to have the centroid trigger and they just want to let it hit there at the D point, and they don't care what goes on in between, whether it is reversal or stuff like that. So they just leave their trade open, and until it hits, then they get the 200 plus clean pips. So that's also an approach, but that all depends on your risk appetite. So the style of how you are going to be trading the geometric patterns is entirely to yourself. It's entirely dependent on the traders themselves. I basically will share all the techniques and various other things, but in terms of risk and style and everything else has to be decided by the trader themselves. Okay, all right, so that's for GBP USD. GBP NZD, I think it is progressing quite well in the bullish zone. So it is still very much a buy type order for GBP NZD. It is in within the zone. I think you have some space to actually buy and to actually exit before it reaches this area right here at 96.20 psychological number. So whatever you do, if you are already on the buying for GBP NZD, just make sure that you are exiting before 96.20. So best to exit at 1.9610. Okay, worst case scenario, because that is basically where you have that bullishness end as well from that bullish mother candle that you can see. Also, you've got an area to watch out for at 95.80 psychological number as well. So now we are trading at 95.30. So you've got a little bit of room to actually exit if you want to exit for now. And if you've got a reasonable risk appetite, you don't want to leave it until it goes at the end of the mother candle right there, then you can actually exit at 95.70, just so that we are away from the 95.80 psychological number. So 95.70. If you are buying already right now, or you want to buy right now, you can. And then you need to exit at 95.70 for GBP NZD. Okay. All right. So GBP JPY, again, it's looking quite good. We are looking at a lot of bullishness for GBP still, right? So it has actually been really good to us as well this week so far, the beginning of the week, to be very bullish on the GBP. So I think that trend may actually persist much more, because also when we were at the heat map for GBP, let's see, and it's not picked up yet, but then the hint has already been given to us that it prefers the upside, it prefers the bullishness. So there's definitely news and a lot of other things that has been marinated to be positive or creating positive sentiments in the market for GBP. So hence the reason for this particular pair on GBP JPY as well. I think you've got some room. We are looking at the daily chart now, and the price is at 153.74 or 75, which is really close to a potential reversal zone, which is the 153.80 psychological number level. So I would think that if we want to look at more buying, yes, we can for GBP JPY, but not just now to actually buy, just to wait until it goes above 153.80 and above. For those who can actually wait a little bit longer, maybe 154.00 and above. So 154.10 would probably be a better buying price, just so that we get a little bit more push to actually participate in this area right here. So I would guess that if I were to, for me personally, what I would prefer is to do a pending order on GBP JPY, but my pending order would actually be at 154.10, and then perhaps my take profit would actually be at least about 100 pips, 155.10. So 154.10 to actually buy and to exit or take profit at 155.10. So I can do that, or I can actually be a little bit more reserved in trading in layers as well. So then you know that your exit price 155.10 is your maximum, and then your 154.10 is your area that you want to conservatively buy. If those wants to buy a little bit earlier, you can buy at 153.90. But I prefer to be a little bit more conservative for myself. And I just want to take that area right there to actually to be the buy zone. If I go on to the 4-hour chart, for example, okay, I'll just mark the area that I'm intending to enter at 154.10. I'll mark it as green right there. Okay. Okay, there you go. 15410. So I'm looking at 15410. Okay. We're all clear on the left side on the shorter term. Right, let's go on to the weekly chart again. So we're still looking at JPY, GBP JPY. So as you can see, the green line has got lots of resistance as well. Just to zoom in a little bit. And a lot of support has actually gone past that green line that we have drawn at 15410. So that, oops, sorry, do that again. 154.10 buy on that there. And if we take it from the line, that was a 4,000 plus pips rise. So that was quite good. And also 4,000 plus pip fall as well for GBP JPY. So we know that that area right there is very, very significant. So we want to now evaluate the bullish candle in the past. So yes, we do have bullish candle there. So we've got bullish candle that started at the green line, and I would think that we've got a powerful single mother candle that went up to 16130. So the opportunity basically following the mother candle, that mother candle, to buy at 15410 right up to the end of the mother candle is about 730 pips. So you imagine you've got potential of buy. If, for example, you've got lots of news as well to push the price of GBP to go up, then you've got 700 plus pips to make, but then you want to make that in layers as well until you hit that number. So I think it's going to be good. But of course, we also have a risk area right here at 155.38. So 155, I think it needs to also consider this area right here. So 155, second, 155.32 area to 155. So you still have 120 plus pips in this area just to exit first and re-enter later on. So basically your exit price, if you entered 154.10, you want to exit at 155.30, let's say. So 155.30, you want to exit just for your first round. That is 100 plus pips anyway already. So then you can take it further later on, because you've got you've got another 600 plus pips there to take as well after that. So we can take that as layers, but what I would do is later on today to actually draw a clearer, nicer pattern to actually provide structure for the traders to understand where they can actually trade. So we've got an A here, B here, C here, D already ended. If there were to be a reversal here, then I will look at an A, B, and then C somewhere, and then and then look at structure of an ABCD pattern. So here we don't have a nice ABCD pattern there. We've got something here, not that nice, but let's just look at A to B. I'll take this angle here. Okay. It's not moving. Okay, not a nice one there because we've got a nice retracement there, not really reliable C point right there. So I'm not doing any pattern for GBP JPY because there's just no clear, nice pattern. Maybe on lower time frame, perhaps you can find A here, B here, C here, D, which looks like it already ended there because of that resistant area as well. We might be expecting a fall of price GBP JPY, maybe reversal at the moment because we've got all these reversal candles, big giant mother candles as well to the left here, one and the other one right here. It has already gone upwards, and pointing upwards is a wick, so it has already given you the hint that the price is exhausted to go upwards. And then to confirm that, you've got resistance here, you've got another one here, you've got another one there. To confirm that even more, you've got bearish mother candles on the left as well. So price would probably be coming down first before it goes up for the GBP JPY, but we've got lots of buying opportunity, I would guess, especially after the London Open. Okay, so that's basically it. So let's look at AUD crosses. So AUD crosses right here, we're looking at AUD USD. Now we can see that if we were to go up here, AUD has shown a lot of bullishness and market participation as well. A lot of bulls are getting into the market, maybe for some reason. Why exactly, we will never know. We will only know from headlines, news, and stuff like that. But sometimes we can get that early warning kind of thing. That is why it's called Forex early warning, in terms of market participation, of people entering the market, traders entering the market for AUD USD right now. So at this moment of time, you can see that there's a nice trend going on. The candle is actually getting longer on the 4-hour chart. We've got nice market participation for the bulls. It is also quite good whereby we've got resistance, 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 3 resistance here. And if this 3 resistance becomes support, it's going to be quite a strong support. So when we look to the left, there is a candle right here, mother candle, that ended up there. So I would guess that the price could actually go up to that area. If it does go up and through this area, which is at the 0.7820 psychological number exactly. So it is exactly at the 20 psychological number. So if it does actually go up there, then it can actually go up further to this angle right here, which is at 40s area. Okay, so that is basically it. So we've got another area that you can actually exit. So this moment of time, I would think that this is a safer area to actually buy, or your buy zone to actually trade. And that is worth only about 23 pips or so, not much, but then you've got some there. At this moment of time, I think the higher the price goes, like AUD, the higher it goes, then you've got more opportunity, because you've got another bullish candle right there. And that bullish candle there, it ended here. Okay, and that one there is about 25 pips again. So it's not giving me a lot of confidence that AUD USD is really going to go up wildly, because I don't see that hint at this moment of time. I see a lot of fall. So I would guess that if it at all it goes up, it would actually reverse very, very largely here. So that means we're expecting AUD weakness, or something that would actually pull AUD down. So AUD is on the buy side now, for now, but I think it's on a very short term. It's not going to last too long. So traders usually, they get a little bit excited, overexcited with any buying or selling that goes on. So they may actually be tricked into the market to actually buy and buy too much of AUD, and then to only know that it will actually fall quite shortly. So we don't want to go into that trap. So it's probably better for us to take it in stages for AUD USD, even though it is showing that there's a lot of buying participation, but it can always be a trick as well. So it's buying participation, but how long? How long is the buying? Is it a marathon? Maybe, in my opinion, not really, because we've got this very big giant resistance right here that has actually triggered the price fall to at least 2000 plus pips down, and that's about 2500, 1600 pips down from that level there. Now from the price now, for example, to the area is only about 300 plus pips up there, right? But whether or not it will really go up 300 plus pips first to actually come down, we don't know that yet, because we've got a bit of resistance here already. And if I go into the monthly chart, they get a clearer picture there. You can see that, definitely that is a very, very significant resistant area right there. But at where the price is now, if you look to the left, there is a giant bearish candle. That bearish candle itself, from the opening price of the bearish candle right down to the body closing price there, is 1280 plus pips. So that is a very, very significant candle with 1000 plus pips. So that's a very heavy bearish candle, and that bearish candle actually started at 0.7938, and we are only about 145 pips away from the current price now. So I would think, in my guess, is that it will go up and go up, but then it will limit itself to actually go up even more and start to reverse at the 0.7945 area, which is very close to the 0.7950. So 0.7950 area should be respected, and whatever you do for AUD USD or buying and anything else, just remember that you need to exit before 79.50. So 79.40 should be your maximum price. Whatever you do now, you're buying now, you want to buy, you want to enter, you need to put your stop loss at 0.7940 at least. Okay, so just so that you don't get don't get disappointed with a very big candle right here worth 1000 pips to actually pull down all your buying profits. Okay, all right, guys, that's for AUD. And let's just take a look very quickly with USD CAD. I have given the green area right there for more bearishness. It has actually gone down a lot. It's actually respecting all the lines right there as well. But then it is also very, very close to a reversal, in my opinion, because you have got this area here that has been a very significant support that has taken price 2,600 plus pips upwards. So that has to be respected. So I think it is due for a reversal already. So for those who have not exited, I think you should actually exit. If you're already selling USD CAD and you're still in there and you're profiting already, I would guess it's probably better for you to exit right now. So then you don't get disappointed with having your profits getting lower and lower, because a reversal is just due anytime or anytime soon. Okay, so that's for USD CAD. Let's get to a few more AUD pairs, and then we can actually take a look at the other pairs. But before that, perhaps we go on to gold first. Okay, so we have seen the heat map. There seemed to be participation on the buy side of USD. So I would think that there may be more reversal first for gold, but gold is definitely within the zone for a buy. So whatever that is actually happening now, in my guess, it's reversals. But then we are looking at it has actually reversed already and things like that. It has actually hit the second TP right there, came back, it came down a little bit, but from what I can see, it's still on bullish momentum. It's still on correction at the moment, and also most of the technical most of the technical side of it is pointing to more still bullishness as well. It's above all the three lines and things like that. We go on to the monthly chart right there. If you zoom into the monthly chart, you can see that the wick is not too high up there. You still have got that bullish candle right there. It's got this bullish candle and this bullish candle to actually ride on as well. That's on the monthly chart. On the weekly chart, we can see, yes, you've got a little bit of a sort of a bit of a reversal type candle right there. But then if you look back, you've got candles like that that has actually triggered even more buying pressure to the upside. So I think it needs to just, it has already, now the price is at 1833.53, and it's already gone past this bullish candles opening price as well, and that is a good sign. So once it's actually gone upwards, it would then go past this bullish candle area as well, and that would actually give more more bullishness. So as long as it actually goes up a little bit more and touch on to the 1840.65 area, my guess is it could actually go up much more, because then it would be respecting all the major bullish candles right there as well. Okay, it's just the threat is basically on this mother candle right here, which is at 1862.52. So that is a resistance zone you need to look out for. When price reaching or close to that area, that is a major area of resistance, as well as the 1869.81 as well. So these are two, but they are still quite far away. Okay, there you go, guys. So that's for gold. This moment of time, perhaps we're going to look at, we've already looked at GBP USD. Let's look at some other crosses. Any suggestions on any pairs that you would like to look at? You guys want to look at any pairs for the moment? I'll just go on to, okay. Right. We can take a look at GBP AUD. Yes. So let's look at GBP AUD. Okay. So now I'm on the monthly chart here straight away, and it's trading at 80.97. So the price seems to be on a bullish candle at the moment on the monthly chart. It looks like 81.00 is your psychological level as well on the upside. Let's just do this. Give me a second. We've got a bullish candle right there, quite a significant one there. Got another one there and another one there. So the shortest one on the bullish side. Before I do that, I think it's probably better for me to also go on to the relative strength index right there, just to look at trend as well. I can see that it's on the upside. There's no hindrance. If I were to draw a trend line on my RSI itself, I can see that it is still on a monthly chart upside, very strong on the upside there as well, using the RSI 5. I can see if I keep drawing trend lines there with many touch points as well, I can see it's quite strong still on the upside. But on the weekly chart, if I were to draw that from the top, yes, you have some space on the upside before it touches that area. Okay, so that's good. And if I go into the daily chart, still upside as well, really strong. Here, if I draw the resistance downwards, it has already broken upside, and then from the bottom here, it's clearly upside. So it's looking quite good on the upside. But what about the strength of it? Strength of it, you use the average directional movement index. You can see on the daily, it hasn't actually gathered that much strength to the upside. Okay. Also, if we are looking at the daily chart, you've got a resistance to watch out for right here. Also, you've got various resistance that are quite close nearby. So I want to respect that bearish candle right there. So that bearish candle right there is at price wise 1861. So 81, sorry, no, it's 8150 area. So I want to draw the 8150 psychological level as well, just to keep you guys safe into knowing where is your resistance. Okay, 8150. There you go. So yes, you are trading at 80, 90 area, very close to the 1.8100. So you've got about 40 plus pips to the upside to actually make for GBP AUD, but not to do any more further buying as yet until it goes through the 8150 area and above. Then you've got some bullish candle to ride on, but not very confident ones. So you got the 40, 50 pips per time to actually make. I would think about 30 pips or so. So you can make 30 pips or so at now, or even at 1.8110 area, and then take profit at 1.8140. So that's 30 pips there. Then once it goes beyond and above 1.8160, then you trigger your buy at 1.8160, you buy, and then you make sure you exit at 1.8190. So because it doesn't give me any confident long candle that is worth 100 over pips or something like that, there's nothing here in this area. Okay, so you've got that candle that is worth about 50, 60, 70 pips. So you want to take only about 30, 40 pips after you adjust the prices as well. And then you want to cut it into different layers just so that you are trading safely for that, because the market is not giving you the hints that it can actually go quite fast and easy and few hundred pips up. It's not giving me that hint because it's got no mother candles there for GBP AUD. So that's basically it. So you can buy at 1.8110 and you can exit at 1.8140. So that's 30 pips. That's for now. That's for now pending order that you can actually do for GBP AUD. Okay. All right. Any other questions, guys? You guys okay? If not, we can end the session and you guys can continue asking me questions as well on the Telegram group or even on the Facebook chat. Okay, perfect. All right, guys. I think that's all I have for you guys. So we have gone through a few, and I've pointed out some pairs that we can ride along, and some pairs that we are waiting on more patterns and more trend clarity. And once we get that trend clarity, we will ride along it. So yeah, that's basically it. Okay, guys. So all the very best for today. Happy geometric pipping, and any questions at all, like I've mentioned, you can also email me at Bretton at kenny.simon@bretton.academy. Okay, so you can always email me there directly, or better still, to actually ask questions on the GTI Telegram group or the Facebook, so everybody could also learn together. Okay. All right, guys, have a fantastic pipping day and pipping week ahead of you, and we'll see you guys again on Friday. Take care. Thank you very much. Bye-bye.